So when it came out this week, we actually thought it was going to come in a little hotter, which would have drove interest rates up, right? But we got some good news that the CPI report cooled a little bit, like you said, and we saw rates go from like 7%, hovering around 7%, to closer to 6.5. So we almost saw like a half a point drop in one shot,
Mhm.
which was big.
Mhm.
Is that going to continue? I don't know. I would love to say, yeah. This market's so unpredictable. I don't. We follow the rates every day. They do change every day. Sometimes the rates change a couple times a day. So you really have to follow what's going on with the jobs reports are another big report that we follow. Retail sales is another big report that we follow. I do think as we head into the summer, they're talking about 2 rate cuts this year, right?
Mhm.
The first one probably, I think personally, this is just my personal opinion. I think personally, September would be the first cut that we actually see from the Fed. And I think we may see a follow up with a second cut in November. I say that because it was originally 6 cuts that we were looking at. When we got into January of the year, they were saying we're going to have 6 rate cuts. One started in March, one in May, one in June, one in September. And quickly that was off the board, right? It was like the reports that kept coming out was inflation is hot, and it kept the rates high. Okay. This specific report that came out really is starting to say that things are cooling. And I think that's going to be the theme
Mhm.
going as we continue. And that the Fed specifically came out and said, no, we're not going to hike. And that those 2 rate cuts are definitely back on the board.